If you guys are investors like me, then you can relate just how tedious the research process can be to find the right stock to invest in. But even after doing all of that hard work, things can still seem unrewarded. It can be so hard to choose the right price to buy that stock at. That's where this video comes into play, guys, because I'll be releasing my favorite techniques to use whenever you're buying your stock for the first time, people. So make sure you watch to the end so you don't miss out on anything.
You know what you're watching. DS Learning Finance. Whoa.
What I like to do before anything is appreciate that investing is a waiting process, people. Yep, it's not a sprint, it's a marathon. Whenever I've researched trying to find the right stock to invest in amongst thousands, I often find myself getting impatient and ultimately steering myself in a direction where I'll make irrational decisions by buying a stock at a higher price. But this actually segues into one of the rules that I like to use whenever I'm buying stocks, and it's basically that I like to buy stocks for a cheaper price than I bought it in the past. So let's say that you bought Shell stocks for £5. By the way, guys, this little disclaimer, those Shell stocks aren't actually £5, they're really expensive. So this is simply for example purposes, okay? And then a month later, you notice that the price actually goes down. It goes down to £4.50. So you then decide to buy those stocks for £4.50. But wait, several weeks later, you realise that that £4.50 price that you bought even then is actually a bit too pricey. So you decide to buy the stocks for £4. Eventually, repeatedly doing this, repeatedly trying to beat the prices that you've bought previously, will eventually get to a stage where you're actually meeting the true value of that stock. And taking it even further, you'll begin to buy that stock for cheaper than what it's actually worth, which really means that you're entering the profit zone. Note that the keyword is trying, though, people. It doesn't always work out that way, okay? Stocks have a funny way of working at times. But ultimately, it's that mindset that will get you investing for the long term. You know, buy low, sell high. And another strategy that I like to use whenever I'm buying stocks is I like to look at the historical data. It's there for a reason, people, so use it. Personally, I like to look at the yearly basis and I like to look at the half-decade basis. I do look at the other time basis when it comes to share price, but I like to focus on those two in particular because then it really allows me to pick up on certain patterns. For example, I own shares in Direct Line. They pay a good dividend, people. We're talking 8% annually. We're talking about them numbers, guys, yeah? So it's a really good dividend paying stock. But what I also noticed when I looked at that sort of time frame of the share price fluctuations for that stock is that whenever it comes to ex-dividend day, the share prices rise quite a bit, and obviously it's because everyone wants that 8% dividend. But what that then means is that I can adjust the price that I'm going to buy that stock at those times if I'm going to buy it. Or I could simply just avoid those times and buy it when it's noticeably cheaper. But if it's a fresh and new stock, boy, just know that you are its history. There's no historical data available for you to follow its peak. And whilst we're still on this historical data sort of topic, you can also use another term called the 52-week range, which is normally in the key statistics section whenever you're researching a stock. And what it basically tells you is the lowest price and the highest price that that particular stock in question has traded for the past 52 weeks. It's a very powerful tool. Comparing that range to where the current share price is, you could set up an order that doesn't put you too high, that you're obviously overpaying for that particular stock, and it's not being too low that it's unrealistic that you'll get stocks for that price. So it can help you set your stocks at the right price too. The PE ratio in particular, the forward PE ratio, is another tool that I like to use whenever I'm looking to buy stock, because it then tells me whether that particular share price is a overvalued case or undervalued case. Basically telling me whether I'm paying too much or this is a real bargain. And the best way to use it is to actually compare it with other competitors that are directly in its market. So for example, if I'm investing in Toyota shares, I'm going to be looking at other car companies. Hyundai would be a great company to consider as well, because especially because they're part of that Asian sort of market. How it fares compared to them determines whether the stock is overvalued or undervalued. You want to aim for as low of a P ratio as possible, because that means that that stock is undervalued, which then means that you can buy it for cheap. And the cherry on top of the cake in terms of techniques that I like to use whenever I'm buying stocks is to look at this current share price for that particular stock and then slightly go under it. Yeah. This is basically what level 2 investors do whenever they're investing on a trading platform. But it is like a watered down version. But it's cheaper too. Don't forget, cheaper. But as to why I like to do this, I've actually done a video on this, guys. So make sure you check it out here if you want to find out this juicy information, because it can save you some serious money if executed correctly. So click on this link here and make sure to watch that video. And that's all she wrote, guys. That's the end of my video for this week. If you guys have found this video useful, or you're going to now go and use some of these techniques that I've told you, or maybe you've just found out about some of this stuff for the very first time, then make sure you let me know, guys, in the comment section below. Okay, I need to know how them gems I'm dropping is helping you guys. And also, I've done a stock market investment reading list in the short description box below this video, so make sure you guys check it out, because there's a lot of information there. After all, knowledge is wealth when it comes to investing. It's your favorite YouTuber, guys, David Solari. I talk about stock market investments, talk about property investments, financial management too, giving you guys that consistent content, you know. But before you guys can go about doing whatever you're going to do for the rest of the day, say it with me: like, subscribe, and share, people. DS Learning Finance. Whoa. Bye, guys.
Whoa.